Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, March 7th, 2022. Well, I have to continue to say that using Elliott wave truly is and has stood the test of time to show an accurate path that the market is likely to take. And where I left off yesterday, we had gapped lower, and then they held it a little bit lower, and then they thought it was a good time to start buying it. And I finished by presenting the alternate view, and that being that if the market had intent to go back up, because we all were reading that there was still a lot of bullish analysts and bullish traders, and they were still bullish even with that gap down opening in Globex yesterday. And the market then continued to tick up and tick up and tick up. And before our opening, they had filled that gap and then some. And when I stood back and I took a look at this, and I thought, okay, it's broken above the 20, it's broken above the 50, and it almost got to the 200, but it failed. And so I looked at the count and I thought, wow, 1, 2, 1, 2, and the next step is slaughter. And also what I was talking about yesterday for the NASDAQ was that if they broke to the upside, they'd had to do it without stopping, without getting through all the moving averages and get itself back above 14,000. If not, we were going to see acceleration to the downside as this wave 3 of 3 of 3 really kicked in. And we were going to see the largest segment of the market accelerating to the downside. Well, that is exactly what we got. I'm going to try to open this up so we can see it. So here we are, prior to the opening, market opens, we get up to that high, and we just start to sell off. Get one little bounce, then we sold off. Get one little bounce, then we sold off and sold off. And now right into this last hour, which is the after hours, they sold it down below support. And now they're just trying to buy it back up a little bit, just to get a little bit cleaner close. I don't know, but you know, either people covering some shorts last minute, whatever's going on. But it accelerated and accelerated and accelerated and accelerated to the downside. And each time, this is really kind of what took place. When it came back down and broke the 50, start to accelerate. Broke the 20, acceleration. Broke the 8 and the 4, acceleration. Broke support, acceleration. Broke next support, acceleration. So you can see how each of these levels comes into play and against what should be happening next. And first of all, when the moving averages start to break, that is providing additional support for the weak market picture. So that's what caused this initially. But then when it started to break the support levels, which would have contained and turned the market higher, then it brings in additional pressure to the downside as levels are breaking, indicating, oh, we are dropping. Oh, we are going down. And this one I thought would hold, and it did for a little bit, but then boom, it slid right through it. And then I thought, okay, we're going to go for the next one down, which is 13,273. And what I ended up doing, so that I can kind of explain, I'll go back out to my hourly chart, see, because I want to show the differences. All of these numbers, these Fibonacci support lines, are for the intermediate wave 3. Then we come in, and these on the not all the way to the right axis chart, but in just the next one in, those are for the minor third wave. So these were important today. So the 382 and then the 50 were important today. Now, coming off, once I was able to put a subminute wave 1 and subminute wave 2 of this minute third wave, that gave me an additional line in the sand, so to speak. And those are the ones that are here on this side. And again, what we're witnessing, or what we did see, is I wanted to see where wave 3 would be equal to wave 1. So subminute wave 3 being equal to subminute wave 1. And it was here at 13, excuse me, a little bit higher, 13,347. But I got that after it had already gone through. I'm like, oh, okay. Well, I do want it to be longer and stronger than wave 1. And we got it. And so it ended up finding support and hanging out at the 50% level for minor wave 3. Now, we still have more to go, but we're inside this the minute wave 3, and we've now kind of reached a support that we're getting closer to. That minute 3, subminute 3, excuse me, is going to be 1.236 times the length of wave 1 at 13,222. And so we're getting into a point where we should see a wave 4 bounce. But I think all we're going to get is from this high at 13,879 down to the low, which is 13,265. So wave 4 could be really big, because we just covered today about 675 points. And although we only ended up down 570, excuse me, 570, we covered a greater distance. And so if we were to take 38% of that, that's quite a rally to come back up. We basically would be looking for this rally to start getting ourselves back up into these levels up here. I wouldn't be expecting that. Now, yes, I'm expecting a bounce. We should get a decent wave 4 bounce. And maybe we'll get a little bit, I think initially we're going to get some follow through to the downside once Asian markets open and once the European markets open. They're going to have to balance out everything against what they're doing to what we've already done, et cetera, et cetera. So there's a little bit of strong possibility that we're going to see some additional downside first. So this subminute 3, the subminute third wave, will find the 1.618 level, which is pretty common when I'm comparing the third to the first. And that's coming in at 13,018. Well, then for the minute 3 to minute 1, it's 0.618. It sits underneath at 13,009. So we've got a little bit of an overlap right there. Now, if this is actually going to be where the subminute and the minute both complete their third waves, something's not right. So I'm thinking if this minute third comes all the way down to here before we get a bounce, then I'm expecting this minute third to come much lower. And now we're looking all the way down here. And then the minor third, again, we're still looking for very heavy duty levels, because this minor 3 would be equal to minor 1 here. And that just is not going to jive, because we're talking about that wave 3 can't be the shortest. So I'd be looking for it to extend further than the distance that wave 1 covered. So now we're looking down here and possibly down here. But here's the 1.618, which is the most common. Again, so we're back up here with the 1.618 is the most common.
So to think that, okay, what happens if we end up there and that's only the 618? So the minute 3 could end there, but the sub minute 3 should not. So here's what I'm thinking, that the sub minute third wave is going to come in right up in here. We're going to get a fourth wave bounce, or we get the fourth wave bounce off of these levels. This was quite the dive. And we did reach a support level that should kind of contain things. So if any additional overflow selling, I would believe it should be held here into this zone. And definitely 13,100, I think, should contain this sub-minute third before we get a wave 4 bounce. Now, if we get the wave 4 bounce off of here and we get up and then come back down, so we get the 4 and we're coming back down in the 5th to complete the minute, well, then I'm looking for it to break number 1 here. This, oh, come on, 13,025. So that's why I'm thinking that we get the sub-minute wave 3 completes here. Then we get the 4, and then we get a 5, which starts to bring us down into these darker, deeper levels. And that's where the minute 3 will finish. Then we did another bounce in the 4, and then we get another 5 that starts to bring us down into these depths. So you start to wonder how a market is going to get to these levels. And so, I mean, I to be honest with you, I was doing it today. It's like, gee, that support looked so far away when the market was kind of dawdling around up here. Now at 13,472 and actually higher, it just kind of sit and kind of come down and come back, come down and come back. And it was just hanging out and then suddenly just plowed lower. And then thinking, well, it's going to hang out about 13,050, 350. And it did, and it went up and it came down, went up and came down, and then it just slid. It just slid and went through that and then bounced back to it. So the markets continued to follow a lot of the Fibonacci and a lot of the Elliott. So I don't know what's going to push the market down. We're now getting pretty oversold. So I'm looking for a bounce just to kind of relieve oversold conditions. But as I have been saying, the market could easily drop another 500 points tomorrow and remain extremely oversold. And then we'd be looking at Wednesday to get a big jam back up higher in terms of a fourth wave, not necessarily within all of this, but maybe a fourth wave on the minute level or a fourth wave on the minor level. But we got a lot of finishing to do in between. So if this comes down, finishes, goes up and comes down. So that's what I'm thinking right in our internal count, that the correction should be somewhat muted. They're going to be good trading, but when we stand back and take a look, it's like, oh, wow, that looks a lot better on my 1 minute chart than it does on my 30 minute or my hourly chart. So we'd be looking at things to kind of begin to slow, get up to maybe back up to there. Then they come back down and then they finish this third and then go back up and they come back down and they're finishing this third. And then they go up and they come back down. And then that's when we're going to work our way down. So now we basically got on the intermediate degree level, we've got quite a few. Okay, intermediate 1 would, intermediate 3 would equal intermediate 1 at 12,198. Well, I'm looking for deeper on the intermediate degree for sure, deeper. Well, we're looking. Here we are. 10,306. Well, that's a long way from where we are. But when we think about that last week, we were sitting at 14,330. Today, we're down to 13,270. Holy cow. counted. Those are big moves. And so I think as all of this third wave action settles in and we finish with our points of recognition, which we're getting close, right? Point of recognition, we're going down. Everybody came back in. So that's what I mean. That's what we look for. Now, so we're going to get that series of 4 and 5s to complete all the way back up to that intermediate degree. Right? This is only the minor 2. So once we get the minor 3 done, we got a minor 4 and a minor 5, and then that completes that intermediate degree. So that's what I'm talking about now. We got a 1, 2, 1, 2. We got a 3, 4, 5 completes this 3, 4, 5 completes this 3, 4, 5 that completes the next larger 3. And because of the degree, they're bigger. They're much bigger. We're not counting little tiny sub-minutes. We're already counting a subminute. So we get a 4 to 5 on the subminute level. First, we get the finish of the 3, then a 4 and a 5 to complete the subminute. And then we go jumping up, and that only completes the minute 3. Then we do another 4 and 5, and now then we complete this. So each one of those, you can see how this in break for minute 3 is pretty big. But it's again that point of recognition for minute 3 to minor 3 to intermediate 3. So right now, this point of recognition is for the minute third wave. When this is done, that point of recognition is for the minor third wave. And when the next one's done, see, we keep going up for our points of recognition. So we still have more to go. That's my bottom line. We still have more to go. What can we look for tomorrow? We are going to get bounces out of this. Today, I'm seriously, every single bounce was a selling opportunity. Some of them were decent, and you had a nice scalp, and you played it on the upside. But they were selling opportunities, and that's exactly what we saw. No matter if they pumped it up, they pumped it up, they pumped it up, it was sold all the way up, and then they just dropped it. And that happened. So I think that we still may are going to be into that until we're all done with this minute third. And that may happen all the way down into here. That's just where the sub thirds may end. And I think if that's the case, it's going to go. It's just going to go. Bounces will get sold. You know, they'll bounce up, but they're just providing places to get short. Let's say that. And then we should get a bigger bounce, that it's measurable. And what I mean by that is I've got all these Fibonacci extensions in place. I would have to start taking some of them out. If I'm really looking for a fourth wave bounce here, then I need to take out these so that I'm not getting so clogged up with all of the Fibonacci sitting there. And so, but I want to see it start first before I'll start to measure it. Because if I do it now, well, I can always put it back. But let's just say, for example, if I take this out, because now I'm clearing that out. And if I'm looking for a fourth wave, I'm going to go over, I'm going to drop it down, and I'm going to go into the retracements. I'm going to go to the top of wave 2, down to the bottom of what I'm considering could be wave 3. So our 382 is 13,495. So if we get that kind of a bounce, then I'm going to say that this is 3, there's 4, and we're looking for 5. But 5's got to come roots, 5's going to get deep, 5's going to get messy. And basically, wave 3 is still going to be the longest because it did come down further. 100% was like up a little bit higher. And so right now it's still looking good. That the subminute wave 3 would still be longer than subminute wave 1. And that would be good because if this is the case, I'm looking for that subminute fifth wave to be kick butt. All right, so I'm taking too long here. So I apologize. But there's a lot to explain into how we're getting here and how things should start to unfold from here. So I'm going to get rid of that again. So here we have 13,403, 404. That would be more in tune from what I would think. But then we have to allow for 13,495. So we want to copy those down. And so that you'll know your levels for tomorrow. And we're going to get rid of that, because what we do want to look at is where can this subminute wave 3 end? And it was down in here. We had 13,019 to 13,010. That would be the zone for where subminute 3 will, I believe, end, or the minute 3 will end. And again, we're breaking below here, so that still sits good. And then we still, no matter what happens, so we've got series of 4s and 5s to do. So I think pullbacks, I think, still are going to be shallow. And if you're measuring them out using the retracements, then I really don't think that these fourth waves should be explosive. I think that they should maybe get up to that 0.382 level, but I'm not looking for explosions. Not while we're still completing all of these waves. And so upside, limited. Downside, very expansive. I'm going to finish it there. Trade smart, continue to use the moving averages, continue to use the Fibonacci. That is now what falls in line because all of our moving averages now are pointing down. So we've gone from pointing up to pointing down again. That's just a resumption of the trend. Okay, that's what I'm going to keep it for today. Our next update will be on Tuesday, the 8th.